Hey everybody, this is Jim at SP500chart.com. It's 4:30 in the afternoon on July 2nd, 2013, and we're going to take a look at the S&P 500 chart after I read this to you. The website and the video are for educational purposes only, and nothing stated at the side or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy that draws lines on charts. I'm going to try to stick with my line of thought today. Okay, looking at a 10-minute chart. Folks, I'm about ready to say I give up. This because we keep just dancing around this, what I think could be a neckline to this inverted head and shoulders pattern right here. But it's not acting exactly right. But it is what it is. It seems to be at least acting, because we keep getting these little signs of a bounce here. Here we open under it, or rather we close under it here, open above it, close down on it, and bounce good this morning. It's looking great. It's looking just like, yes sirree, boy, that was a great call. And now what happens? Now we close right at that line, but approaching it from the underside. So what do? Well, I think sometimes you just have to say, wait, see. Let's see what happens. There is an interpretation you could make where this little descending line right here maybe needed to get a good solid back test. Yeah, I don't know. That might be what's going on, but nothing really seems to be very organized right now. But for the sake of at least doing something where we can define a trigger, let's draw a little line across these last two peaks of the past 2 days, and let's just say, hey, if the S&P can get over that, please let it get up there and get that back test done, or get up to 1640 like it sure seems like it should do. So guys, it's just, what can I say, every now and then it's just rough sledding. Now, I'm going to back up for a second, and we're going to look at a 2-hour chart. And I just want to remind you too that the video we did over the weekend entertains the possibility that we could be setting up a fairly large head and shoulders top here. Of course, it would not be confirmed as such until we came down to take out this neckline. And I remind you, until we come down to that line, I don't even really want to call that a neckline, but I mention it because we are seeing some reluctance right here around the 1614, 1620s. We're seeing a little bit of what appears to be an inability to make that target from that little pattern that's down here. And if this does fail, and we end up coming back down to something around, well, let's say 1570, 1572, 1575, just something around the 1570 area where this line would exist in the upcoming weeks, then I would really, I think this is a view of the chart that we would want to keep in mind. So make a note of that in your own notes, that there is a possible bearish setup that we could be witnessing here. But on the very short-term chart, you know, it still looks like we should be getting up to the 1640s. So let's see what tomorrow brings. maybe we needed this little weakness today, and then tomorrow things will resume and we'll get back over this, dare I call it, a neckline. What's kind of funny is if we take that line and make a parallel, you can see that this does seem to provide some support, at least on a couple of occasions. But that's not really what you look for in a neckline. You look for the neckline to be defined by the 2 points that define the inverse head or the head, if it is a standard head and shoulders top. And again, if we get up to 1640, there are a number of reasons to expect resistance, not the least of which is this rising support line that got broken down on the 20th. Finally, we had this swift move down here that really leaves a gap. Now, I'm not a believer in the notion that gaps have to fill, but I am definitely a believer that when you approach a gap region, you typically would be on the lookout for either gap resistance in this case, or if the gap was underneath, gap support. So guys, there's your video for July 2nd, 2013. Thank you for taking time out of your day to watch this. Remember, it's a short trading day tomorrow, and the 4th of July is a market holiday. So have fun on the 4th. If you go out to the lake, be safe. If you play with fireworks, be safe. Hey, tell you what, just be safe. And we'll see you with a weekend video after we see what happens. Well, actually, no, I'll do the video tomorrow after the half-day session. But on Friday, we'll get that video done as we typically do over the weekend. Thanks again for watching. Take care.